Happy evening, members. First of all, sorry for 3 minutes delay due to technical issue. This is Gaurish Bhargav, Chairman of Accounting, Auditing, Corporate and Allied Law Committee, KCAA. Karnataka State Chartered Accountants Association is working continuously for the empowerment of CA fraternity. It has been organizing and conducting various webinars and seminars for the benefit of members. Today, Accounting, Auditing, Corporate and Allied Law and Cooperative and NPO committee jointly has organized professional development series by Messrs. A.S. Vishnu Bharat and Co. and C.A.K. Sachidananda, a seminar on audit of trust and NPO in reference to standards on auditing as a part of knowledge sharing to CS community. For this session, I would like to welcome today's our speaker, CA Aniket S. Talati. Sir, welcome you, sir.
Thank you. Thank you.
I also welcome our cooperative and NPO committee chairman, C.A. Sriram, sir, for this session. Sir, welcome, sir. I would also like to welcome you all participants for this session. Welcome you all. Now I would like to introduce today's speaker to you all. It's an honor and immense pleasure to introduce today's speaker to you all. A man of refined thought process, quick understanding, and a sharp vision. He is a Central Council member of Institute from term 2019-22. Having served the profession for about a decade, he had been elected to Ahmedabad branch for the term 2010-2013 and 2013-2016. He was elected to Western Indian Regional Council of ICA for the term 2016-2019. He has served as the youngest ever chairman of Ahmedabad branch for the year 2014-2015 and as a secretary WIRC Master of Commerce and Articleship with Lovelock and Levis, network firm of PwC. He has developed a unique perspective to look into the matter. He has led the cause of profession through various committees of the branch and regional council. He is also chairman of Financial Reporting Review Board and convener of Digital Re-Engineering and Learning Directorate. He is also serving on Board of Studies, Digital Accounting and Assurance Board, Accounting Standard Board, Auditing and Assurance Standard Board, and Direct Access Committee, among others. He is also Executive Committee member of Gujarat Chamber of Commerce and Industry. With straightforward approach to profession, he has always been concerned about the expectations of his professional colleagues and their aspirations. Profusely interested in the brand Indian CA and ICI in India and abroad. He has always loved to act as bridge between the stakeholders and the institute. Being thoroughly conversant with the professional concern and demands of his times, he has authored relevant books introducing Treatise of RERA, published by CA Association Ahmedabad. An academic by temperament, he has published numerous articles in newspapers, magazines, and professional newsletters and delivered lectures in about 150 seminars and conferences. He also served on the board, on the governing council and executive committee of HL College of Commerce. He is none other than today's our speaker, CA Ankit Sunil Talati. Sir, thank you for being with us. And session is over to you, sir. One announcement. We might be having today's our guest Vishnu Bharat, sir. Due to technical reason, he was unable to join at the beginning. He'll be joining in between, and he'll be speaking 2 or 3 minutes, and he'll address you all. Sir, over to you.
Aniket sir, one small announcement before that. I request all the participants to post your questions in Q&A box to the addressing to the all participants. Thank you.
Thank you very much for the wonderful introduction. Though I don't think I'm worthy of so many words, but you've been very kind, Gaurish, in introducing and reading out the entire introduction for me. To Sriramji and both of you and the entire Karnataka Chartered Accountant Society, I think you're all doing a phenomenal task, and it's always a pleasure for me to be with the Karnataka State Chartered Accountant Association. Even at Ahmedabad, as you would have read in the introduction, my publication, the first ever on the real estate law, RERA, was published by the Ahmedabad Chartered Accountant Association. And I believe all these associations, it may be the BCA, it may be the Karnataka State Chartered Accountant Association, the Chartered Accountant Association at Ahmedabad, at Surat, at multiple places in the country, they all have a very important role to play, because at some places where the institute probably is not in a position to represent, sometimes is not equipped and placed to probably represent the local matters in a more appropriate manner. I think these associations come in, you know, the local ground realities, the problems that the members face at that level. And there I feel the associations are doing a phenomenal job. There are some standout associations, and out of them, the Karnataka State Chartered Accountant Association is one of them. So thank you for inviting me, to Gaurish, to Sriramji, and to everybody else who's in the managing committee or the executive body of this association. It is in fact a very pleasant surprise and pleasure. A pleasure because I've had the opportunity to interact with some of your office bearers in the past. In fact, when I was in Bangalore only last year, when Ahmedabad branch had done its RRC on GST at the at Bangalore, I met some of your office bearers, and they had actually presented some of the wonderful publications that the association is coming out with. And that was a pleasure meeting them, interacting with them, other certain matters also, because of which I interact with them on and off. But the surprise was because that the topic that has been chosen by the association. Audit and trust in NPOs, I believe, yes, there are certain aspects that we can discuss, we will be discussing today. But very importantly, what was added in the topic was the engagement standards or the auditing standards. And at the beginning, Sriramji told me that please focus on the practical aspect of these auditing standards. Why are they important? What must be done in the day-to-day practice of chartered accountants, of SMPs? Because we generally are very compliant when it comes to the accounting standards. If you err on the accounting standard, you do not, for example, account for inventory in the correct manner. You state inventory is valued at cost, and we do not say NRV, and we do not follow an AS2. Looking to the financials itself, somebody can draw an inference and say that there is a non-compliance. If you do not have similarly a related party disclosure, then immediately somebody can, looking at the financials, say that the auditor does not know his basic accounting standards and he can be flawed upon. Auditing standards, on the other hand, are not seen apparent from record. You cannot see the financial statements and judge whether the auditor, the audit firm, or the chartered accountant involved has actually applied audit standards. That test has to go a step deeper and generally comes out only in cases where there are complaints, where either the company or the trust or the NPO or any other entity went down, and then there were investigative agencies coming into picture. At that point of time, these standards are extremely critical. And why are they critical? Because not that they can help these agencies point a gun at you, but in fact, it is my firm and honest belief that it is these standards that give the protection to the auditor against any disciplinary mechanism of the institute, against any action by any investigative agency. Because if you can prove that your audit was done as per standards, that whatever was expected out of you or me as a practicing chartered accountant and a member, we exercised that due diligence and we conducted the audit in accordance with these standards, it is that which will help us, which will ensure that no untoward calamity comes to us or we are not exposed to any such risk. So, like I said, pleasantly surprised and extremely glad to be here, especially on this topic. In fact, let me share with you that this year, the ICI was so concerned about the lack of understanding regarding these basic engagement standards that we have made it mandatory for all members to do 2 CPE hours on code of ethics and 2 on audit standards. And this was done not to put a stick and to ensure that because we are not getting participation in this lecture, or in these sessions. We want to force it, but because we truly believe that these audit standards, the engagement standards, are crafted, are designed, and are there as your protection. And as we move forward, I believe we have also been joined by Vishnuji, who would like to share his thoughts before we commence our discussion on these engagement standards. So maybe over to you, Gaurishji or Vishnuji, if you want to take it up.
Vishnu sir.
Hello.
Hello, sir. For today's session, I welcome you, sir.
Thank you.
And I request you to address members for 2 minutes, sir. Thank you.
Very good evening to all of you. I, as the past president of the association, at the outset, I would like to congratulate and Sri Kumar and his entire team for taking over KSCA for 2021. It is very challenging here by all means. Nevertheless, there will be involvement of technology. We, the people in 70s, are forced to rope into this system. Otherwise, we will be outplaced. When I was heading the association, to take the members of Mysore, Hubli, Belgaum, and all as co-opted members to see that the representation is there from all over Karnataka. But today, I off and they were able to meet the challenges. So because of this technology, we can do wonders. The people who are in the nook and corner are able to participate in the meeting. They can enhance their knowledge. Will take the technology. I also request the new team to, they are very well, and the news bulletin, even the speaker was mentioning about it, and it is the ambassador of the association. And this news bulletin has to be used as a powerful tool to see that all the members are immensely benefited. And in fact, the very first issue, I see very, very good articles by the known authors like Krishna Swami. They mean taxing of the undeclared income, faceless assessments, and many topics chosen are very, very interesting and very informative. So this is a timely step taken by the association. I request them to continue their good work and see that, in this challenging year, how they can take it up further. As regards to today's topic, I again congratulate Mr. Kumar and his entire team. The topic chosen is, timely and also very, very important. So I'm organizations, charitable institutions, maybe in educational, I'm in the Vedic school, I'm in the blind, students association, and organizations also. Everywhere we are finding so much of problems. I no doubt that this has been misused, or I should say, this abused by so many people. But nevertheless, charitable institutions are doing human service to the society upliftment. But for these charitable institutions and organizations, the things would have been very bad. They have come to the help, and the government alone cannot take up the challenges of what the country is facing, what the world is facing. The charitable institutions will definitely take it, say this one, but we should ease out, and things are there. Now, the gross income or net income issue is there, and 85% of the income what has to be spent. Okay, that is perfectly all right. More than 2,000 rupees donation cannot be taken in cash. There are so many assessees who will not have, the proper PAN and other things. So they are who wanted to do it. So that is also becoming a problem. I mean, few of them are misused, and you should not make it blanket problem. Nevertheless, the things are there. We have to abide with it, and let us see how best we can take it up. And this charitable institutions itself has become a field by itself for the chartered account. In this field, and it is doing a very good thing, and I'm sure that the speaker will be able to give it the insight out of the charitable institutions, how to see that we, several problems faced are uh, overtaken. Thank you very much. Thank you very much. Over to the speaker.
Thank you, Vishnu sir. Sir, over to you. Ankit sir.
Thank you. Thank you so much, Gaurishji, and thank you to Vishnuji for giving his introductory remarks. So, like I mentioned, we were discussing about, yes, the trust in the NPOs and the audit standards. I feel it is the right time, and that is why I was complimenting the Karnataka State Chartered Accountant Association that they have taken up this important topic of auditing standards, that is our engagement standards, that are going to be discussed in today's session. Honestly, what we have discussed by Vishnuji also mentioned that these charitable institutions have been of critical importance, especially during this pandemic times after Corona. A lot of human services being done, a lot of places where the government could not reach, where government machinery could not reach, where it was not possible for the state agencies, for the central agencies to deliver relief, to make sure that people are getting food, they are getting rehabilitated. It was, in fact, these very trusts, NPOs, and other organizations and charitable institutions which have done this human cause and ensured that we as a society, as a country, were able to reduce the impact, make sure that there are not such many extreme hardships which are already in place because of the pandemic. We do not extend it or aggravate it further. And yes, we have to commend these contributions that have been made by these charitable institutions. Similarly, when we are looking at a pandemic, we have all changed the way we look at our life, the way we practice our life, the way we are living our professional journey. I only yesterday came back to Ahmedabad from Delhi. I was there for certain unavoidable work of the institute. I myself felt honestly scared traveling, taking the flight, staying in a hotel, using public transport, or going to the institute office. But there are certain tasks relating to examination, other areas which have to be done as by us as elected council members, and we did that. But what made me safe, or what made me feel that I can do this work? It is certain safety standards that have been introduced by the government. It may be the simple step of wearing a mask. It may be the simple step of sanitizing your hand. Colleagues, you will agree with me, 9 months ago, the word sanitizer, maybe Karnataka and Bangalore and places like that are state where people still have a good vocabulary in English. In Gujarat, if I would have mentioned sanitizer, I promise you 99 out of 100 people would not know what that is. But today, every single person on the street knows what a sanitizer is, what safety standards are, why it is important to wear a face mask, why social distancing is important. In a country where it was always said that the second person in the line is never the person behind you, but the person next to you. Because when you go to a bank and there is a long queue, there is a person who is being attended to, and the person who is going to be next used to stand right next to the person, so that as soon as he walks out, he takes his place, and the person in line is the third person. This was our culture. But we have moved and accepted from that to our safety standards of social distancing. So the question that emerges today is, if we have been able to accept these social changes, these safety standards, which protect our physical health, our body from injury, from this corona, from the pandemic, if these safety standards have been adopted by us, why don't we also adopt our auditing standards in the same view? Because just as these safety standards are protecting the quality of our life, our own health, our professional health, our financial health is protected by these audit standards. But somewhere, like I mentioned in the beginning, accounting standard errors get reported, are easily highlighted, and therefore we take them far more seriously. and the audit standards, for most of us, probably the journey ended when we cleared our CA final examination, and rarely do we end up opening the books to these engagement standards. My endeavor today is going to be to take you through these engagement standards. And when we complete, I am sure, confident, and hopeful that you would have learned certain very important aspects relating to audit standards, the whole umbrella of engagement standards, which you will then be able to put in place for your practice, for your small and medium practice firms, which will definitely aid and assist you to ensure that tomorrow, if something goes wrong in any of the audit reports that you have signed, any of the certificates that you have issued, you still have safety net with you. You are aware and confident that your task of conducting that audit, whether you were supposed to look at something or not, whether it was your responsibility to do something in a particular manner or not, all of that will be tested against these standards, and our knowledge of these standards will surely help us in the long run. So I like to call these standards as a kavach, as a cover, as a protection cover, or as a protection kavach, which protects all of us from these further scrutinies of audits. And as chairman of FRRB, let me share with you, the scrutiny is increasing, not just at the institute level, where the FRRB is looking at the listed company audits, looking to the compliance of accounting and auditing standards, of Companies Act, of CARO, of Schedule 3. Even at the institute, there is a tax audit quality review board, which is looking at the tax audits of all the tax audits that we are doing. There is the QRB, which is looking at the listed entities. There is the NFRA, which is looking at public interest entities. And more importantly, with all the bank frauds that are coming up, so many other investigative agencies are also looking at scrutinizing our work. It may be the CVC, the CBI, it may be any other agency that gets involved into these criminal proceedings as well. So therefore, very important for us to understand this. And at this juncture, post-pandemic, when we are opening up our offices, when we are all facing a staff crunch in a manner that all articles or all employees are not reporting to work, we do not have the same amount of time, but we have the same amount of work that has to be done, the same clients that need to be serviced, the same audit reports that need to be signed. How can we use technology, other processes, and make sure that understanding the auditing standard framework, how can I reduce the amount of hours spent on the audit, but at the same time improve the quality of audit and come out with a set of audit report or financial statements, or the 10B in the case of trust, which is qualitative and yet consumes lesser time. So dear friends, that is the endeavor that I'm going to take you through today. And for this, let me then share with you my presentation, which I will also be emailing across to the society and to the association if they want to share it further with their members. So the first question that I have, and I hope there is a chat box here which you can reply to. If not, maybe you can use the Q&A, or maybe I can just set up a simple a poll if possible, and you can answer on that. My simple question to all of you at this juncture will be, you see this beautiful library in front of you. You would have all at some point taken certain publications from the institute. You can see that they are all colored differently. There are certain which are in green, there is certain which is pink, there is in amber, there is in dark green. Do we know what is the purpose of coloring these in a certain manner? Or does it depend that Aniket likes pink, Mr. X likes green, Mr. Y likes red, and therefore these publications come in separate colors? Well, let me answer that, because I don't believe there is a question answer session that I can enable here. But each of these documents, every single piece, you can see some of them behind me in my shelf here also, they have a color and they signify something. What is the significance of all of them? Well, the one in the center is the compendium of standards. There is accounting standards, which is now also Ind AS for listed entities. There are standards on auditing, which we call as the engagement standards. There are standards on internal audit, which is known as the compendium of standards on internal audit. These are all standards mandated by the council and therefore are in the nature of mandatory standards. The internal audit standards date of effectiveness has not been notified, but they are in the nature of mandatory. And whatever is mandatory, it is issued under section 17 with the power of the council, and therefore are mandatory to be followed by all practicing chartered accountants. At the same time, you are seeing certain light green publications, technical guide, background material, educational material. These, dear colleagues, are issued by respective committees of ICI. They are only issued by the committee, not by the council, and they are therefore only aiding you in conduct of certain assignments. So they are very specific to certain class of transactions or certain class of companies, and therefore they are a different set of color. Whereas if you look at the dark green in front of you, which is the guidance note of audit of banks in this picture, similarly, there is a guidance note on tax audit. And even for this topic that we are discussing today, that is the audit of trusts and NPOs, there is a specific guidance note. The guidance notes, dear colleagues, is issued by the council of ICI, not by the committees. Yet, they are not in the nature of mandatory. They are termed as recommendatory, but generally members should always comply with whatever is given in the guidance note. If they are deviating from them, they must have a proper reasoning, maybe in the act or in the standard, or else they must follow the guidance note. So if you look at the hierarchy, the standards are always mandatory, guidance notes are recommendatory, but you may carve out exceptions provided you have certain legal understanding or reasoning for it. And below that are the educational materials, background materials, technical guides, and other publications of committees, which are all need to aid and assist our members. Why it is important is because the audit standards that we are going to discuss today is the pink, which is mandatory. And we will discuss them in detail, what these standards require us to do, how you can use these standards to reduce your work, yet improve the quality, be in compliance, your documentation in order. And we will also discuss one dark green publication. In fact, we will discuss two of them, which are extremely useful, I believe, in our day-to-day life. So the first one that I want to discuss today is the guidance note on reports and certificates. And I'm sure very few of you till today would have ever heard of this guidance note, because it is our practice. What do? Whenever there is a certificate required, we take our letterhead, we say to whomsoever it may concern, based on the information and explanation provided to us and the books of accounts examined by us, we hereby certify that, and we write whatever the client requires. If the certificate is required for a banking purpose, we give this standard certificate. I'm not saying all of you will be doing it, but my understanding and experience has been majority of us prepare our own formats for certificates. Similarly, for certain certificates required for banking purposes, we use the same format, whereas there are different agreed upon procedures, as well as for prospective financial information, different set of standards available. For other works also that are not in the nature of certificates, we end up calling it a certificate and not a report. Very important for us to appreciate and understand that the institute has come out with a phenomenally well drafted guidance note on reports or certificates. So whenever you are now going to give a certificate, for example, for inventory, for certain balance, or maybe net worth certificate to your client for the purpose of tender or for any other purpose, this guidance note gives you the steps that must be followed. And if you do not even go through the guidance note, it's all right. There is a beautiful appendix at the end, which has illustrative formats of certain certificates. I would request and urge you, for all your trusts, NPOs, or other entities also, where you are issuing certificates, try and use this format. Now that UDIN is compulsory, these certificates are generally traced back. A lot of them get verified at the ICI. And therefore, it is in our interest to ensure that our certification work is always in compliance with the institute's mandatory standards and its requirement. It's a beautiful guidance note. The certificate at the back is such a well drafted that it will state what is the purpose of the certificate. It also states very clearly what is the work that you have done. So just saying that we hereby certify that the net worth of the company is so much, it tells you what as an auditor is the responsibility of the company, what is the responsibility of the auditor, how have I arrived at this net worth. So I looked at the immediately previous signed financial statements. This is how I derived at the number. This was how I derived the net worth. More importantly, there is a paragraph at the end which says restriction of use. So many times I would have seen that you have actually given the certificate to your client in good faith that he said I need it for a tender purpose. And what ends up happening? He uses it for 5 to 10 different purposes. He uses it to apply for a loan in the bank. He applies it to apply at multiple other locations. He may, for all we know, even apply for obtaining a visa with the embassy. And just because we say to whomsoever it may concern, he ends up using these certificates for any purpose that he deems fit. Therefore, my request to you today is that once we have understood the hierarchy of these documents and the importance of guidance notes which are issued by the council, please, for any certificates or report that you issue, kindly refer to this guidance note on report and certificates issued by ICI. Similarly, there is a very nice guidance note which is available, which deals with the audit of public charitable institutions under the Income Tax Act. That is the 10B report that we do give for these trusts, for the institutions. Here, it is very clearly and categorically at the beginning stated that this guidance note applies for all the entities who seek exemption under Section 11 of the Income Tax Act. They may be a trust, it may be a society, it may be a company. The guidance note is also, it refers to Section 25. We are all aware under the new Companies Act 2013, it is Section 8 of the Companies Act, which is applicable. And for all of them, this guidance note is what is going to be applicable. Here, we have referred to all of them as institutions because we call them as an institution. It may be a company, a trust, or a society. Though there is a technical difference between trust and institution, the entire guidance note deals with the institution. As you are aware, to get exemption under Section 11 of the Income Tax Act, two conditions that have to be majorly fulfilled. One, that the institution must be registered with the commissioner. That is under Section 12(1)(a) of the Income Tax Act. The application has to be filed and the registration has to be received. And the second requirement is that audit under Section 12(a)(1)(b) will have to be done for that year for those accounts of the institutions that are subject to audit. So that is required for the trust. It is a basic requirement for them to claim exemption. So the question that arises is, when is audit mandatory? The audit under Section 12(a)(1)(b) becomes mandatory if the total income of the institution for the relevant year exceeds maximum amount which is not chargeable to income tax. That is 2,50,000 currently. The Act provides for the maximum amount which is not chargeable to tax. So if the amount exceeds this, then the accounts are subject to audit under Section 12(a)(1)(b). That is Clause B, subsection 1 of 12(a) of the Act. This means that if the total income of the institution in any previous years before giving effect to the provisions, if it is less, then the audit is not required. The question arises is, what do we do with regards to contributions which are given with a specific direction? As you are aware, after the amendments that were made in 1718, now for all corpus contributions, it is a requirement that they must clearly specify along with the contribution that these are to be applied towards the corpus of the institution. So any donations which are received as a part of the corpus of the institution as defined under Section 224, they are not to be included in terms of the computation of this limit. However, incomes which are exempt, such as which are exempt in Section 10, the dividend income and other such exempt incomes, they are not to be included for ascertaining whether the income exceeds the maximum amount which is chargeable to income tax. So therefore, when is the audit under the Income Tax Act for trust mandated? It is when the total income of the institution for the relevant year exceeds maximum amount which is not chargeable to tax. This is provided in Clause B of subsection 1 of 12(a). We are all aware of it, and very important for us to understand that this then triggers the requirement of audit. And this is audit under the Income Tax Act. We generally refer to tax audit only as the audit, which is under 44AB, but even this is mandated under the Act. It's an audit, as the certificate calls it, as an audit report, and therefore a UDIN is to be compulsorily generated when you are filing a report under this section. Also, A very clear-cut direction under this clause has been given, which discusses the scope of the guidance note and the work that has to be performed by us chartered accountants as auditors. And under the guidance note, there is a clear scope criteria which says that it is restricted to the audit of institutions for 12A1B, and the compliance that are to be verified are from section 11 to section 13 of the Income Tax Act. So, but at the same time, the nature of audit, of how you will conduct the audit, the format of the report, what is the expectation is given and laid out in the code, which is the Income Tax Act. And therefore, effectively, yes, you are only reporting the compliances or non-compliances qua the Income Tax Act 1961. But since the terminology used is of an audit report, you are compulsorily required, and even the guidance note emphasizes this, that the accountant has to adopt the same procedures as you would in the audit of any other financial statement. What does that imply? That standards in auditing, engagement standards, all are applicable even in the case of audit of trusts and NPOs. So very important for us to understand. We've understood in terms of when the audit becomes mandatory, when the income exceeds the maximum amount chargeable to tax, 2,50,000 in this case, then the audit under 12A1B will also have to be as per standards on auditing. This fact has also been re-emphasized in the guidance note. The corpus donations will not be included as a part of this, but dividend and other income which is exempt will be included for the calculation of this purpose. As we are aware, the audit report under section 12A1B is required to be given under form number 10B. That form has been issued or prescribed under rule 17B of the Act. And here the auditor is giving his opinion. And when we are giving an opinion, the entire SA 700 series, which deals with auditor's opinion, how is the form of the auditor's opinion going to be? What should be the paragraphs that you must include here? That get covered by the essay. So there is a beautiful interlinkage within the form and our auditing standards also, because when you are giving that the accounts give a true and fair view, you are effectively expressing an opinion, and the opinion has to be in line with our audit standards. Why it is important is because some of us end up issuing a report in our own format, very similar to how we discussed the reports that are issued for certificates, and people use their own formats. Even in case of such tax audits or in case of a 10B, one has seen so many times that when the qualification criteria or comments have to be given in 10B, certain members are using emphasis of matter, then they also say qualifications, then they also put an adverse opinion. Some people even say, I am disclaiming my report for this purpose. Now let us understand, these all are not going together. You have to, as an auditor, apply your professional judgment and skills and decide what does this audit require. Is it an emphasis of matter? Then you emphasize that point and draw attention to it. If you require a qualification that your 10B is saying true and fair view, subject to A or B, that is a qualification. An emphasis of matter is not qualifying. You're only drawing attention of the user of the report. In this case, primarily the assessing officer who is going to do the assessment of this trust or NPO. For him, you can draw an attention to certain point. So that is emphasis of matter. Your qualification is a subject to statement. A disclaimer, dear colleagues, means I disclaim responsibility. The books were not available. They were burnt. The possession was not available. There was a flood. In such situations only do we use a disclaimer of opinion. You cannot disclaim certain part of a report because it itself says that I am disclaiming the opinion. And similarly, an adverse opinion can also be given where you can clearly as an auditor state that I do not find the accounts to be true and fair. So these are to be read in conjunction with our standards on auditing. We have various slides that we will today discuss on these standards on auditing, subject to the time that is available to us today. But very important that we appreciate and accept that the audit report under 12A1B, which is given in Form 10B, is not just that opinion, but it is also in conjunction with the standards in auditing. The principal aim, as described in the guidance note, is to enable the assessing officer to satisfy himself about the genuineness of the claim. So as auditors, it is our sole responsibility that the claims that have been made, the application, the 8515 that was discussed earlier, that application is genuine, and also that the objects of the trust, as we are aware, there can only be three major objects. It can be for the purpose of education, for medical, or for relief of poor. So that the objects are met, or anything in connection to these three objects. This only has to be ensured, and the genuineness of the claim has to be ensured. If you are seeing a trust, and then there are luxurious cars, a BMW or Mercedes being bought in the trust, well, trusts logically will only have, if a hospital is there or doing medical aid, you may have an ambulance. But to justify luxurious cars and other assets in the trust, I think there is a huge question that will be also asked of us as auditors. And the responsibility is of us when certifying whether this is actually genuine and is correlating to the objects of the trust. You also have to ensure that the entire accounts, the form, and the trust has complied in all material aspects with the statute, that is the Income Tax Act of 1961. You will also have to satisfy whether proper books of accounts that are required, the returns that are to be filed from branches that are to be received, and all the relevant records are being produced and maintained. It cannot be that you simply have a bank statement or a credit card statement, and the trustees have said that these are the expenditure in relation to A, B, C, D, and we issue the 10B. Supporting documents, which we will discuss when we look at the auditing standards, the audit evidence standard, the audit documentation standards, they all have an interplay with our requirement to certify the information and the details in the annexure to 10B to be true and correct, and true and fair view to be given on the accounts. It is important that we satisfy ourselves, not just regarding genuineness, but also the relevant records that are required to be maintained, and that the profit and loss account, of course, we use income over expenditure when we prepare the statement, but the 10B restricts itself to the word profit and loss, and therefore we will stick to profit and loss, and that the balance sheet give a true and fair view. Very important point with relation to the 12A 1B audit, and we will discuss this in detail when we look at the other standards on auditing, is that your primary responsibility of doing the audit under the Act is to ensure that the compliances of all the clauses that are applicable under the Income Tax Act are, and the provisions of the law are being followed. But it is also incumbent and cast upon us the requirements as are there in other laws, because there is a specific standard, and also the guidance note of the institute talks about this, that requirement of other laws such as FCRA, which was recently amended just yesterday, the parliament session got over, or the Societies Registration Act, and other such requirements are also complied with. So you cannot simply state that I have only restricted myself to the clauses of 10B and given my opinion. As a chartered accountant and as an auditor, because this audit has to be conducted in line with our standards in auditing, we will also have to ensure that requirements of other laws, compliances with those laws have been ensured. And where do you mention if there is any deviation? We discuss about the emphasis of matters, the qualification in the report, the disclaimer or the adverse opinion that you would wish to draw. There is in the 10B the expression used which says subject to comments given below, and you can give your comments in this section. So this sentence is not just relating to the maintenance of proper books of accounts or the proper branch returns, but if there are any qualification, if you look at the footnote number 3 in the form which is prescribed in 17B, it says that accountant's negative report or qualifying report can be to any part of the report. So therefore, just because it is included in the para that deals with maintenance of records doesn't mean that you are only supposed to qualify if books and records are not maintained. No, the footnote 3 clearly states that if you have a negative report, that is an adverse opinion or a disclaimer of opinion, or a qualifying report, that is a qualified opinion, or maybe even an emphasis of matter. Those can relate to any part of the report of the 10B. In other words, the form of audit report is prescribed, but it is not to be taken in absolute. You will have to make certain changes to it. So this is with regards to the audit under section 12A1B and the 10B. We will come back to it a little later when we deal with the standards, and then we can discuss certain specifics about the trust audit of what must be taken care. But I hope we are all in our minds very clear regarding the authority attached to the documents of the institute, how standards are mandatory, guidance note though recommendatory, extremely important for us to follow and can be only deviated for certain circumstances, and other guides are only to aid us. The guidance note on trust and NPO is to be used for us by us when we are finalizing the 10B report. We also discussed about the guidance note on certificates and reports, which I would urge all members to follow and use whenever you are giving any attestation, certificates or reports relating to trust NPOs or even other entities that are your clients. So then let us move on to a very important definition or word which we use in our day-to-day life. We say we are in the business or in the profession of assurance. What is assurance? The definition of assurance, the standard definition which is given, is that the assurance engagements mean an engagement in which a practitioner, that is a chartered accountant in practice, expresses a conclusion. You are coming at a conclusion. True and fair view exists or doesn't exist. That is a conclusion which is designed to enhance the degree of confidence of the intended user. So therefore, if it is a report which will enhance the degree of confidence, but of whom? The intended user other than the responsible party. So if the management is responsible to making accounts and you are reporting only to the management, it is not assurance. If there is an other party other than the person responsible, only then it can be termed as assurance. There has to be a third party. In the case of a trust NPO audit under 10B, form 10B, which is under 12A1B, we are reporting to the income tax department. The report is addressed there, and therefore there is a party other than the responsible party to whom you are reporting. It will be termed as an assurance service, an audit service, and therefore a UDIN, like I mentioned, is mandatory, and it is audit under the standards. Very important for us to understand, because sometimes when we give a certain certificate to the management, we call it a certificate assurance and attest function. But if that certificate is only for the purpose of management, only reporting to the board, then dear colleagues, it is actually not an assurance engagement, and we must not refer to it as an assurance engagement. And why that is important is because then your standards on audit do not even apply to such engagements. Audit is a subset of assurance. So assurance, the larger gambit, and under that falls audit. So if you're only reporting to management, the audit standards are not there. In the case of trust and NPO, yes, your report is to the assessing officer to aid him and assist him in arriving at the total income, and therefore it will be an assurance function. So once you understand the definition of assurance, it's very easy for us to understand which set of standards apply. And today, the title I changed slightly to what was given to me by Sriram Ji was, he said standards on auditing. I changed it to engagement standards, because it is these 5 standards in total that form the engagement standards. And yes, the standards on auditing may be 90% of it, but there are other set of standards also which are very important for everybody to understand, which I will try and endeavor to discuss in today's session. If you look at this chart at the left, it's a very easy waterfall kind of a chart, which will make it very easy for you in any event in the future to decide what are the actual set of standards which are going to be applicable for you in any engagement that you are performing. Let's see what is at the top. The Chartered Accountants Act, the Code of Ethics, and the pronouncements of ICAI, that is of the Council. These are at the top. This is the framework. This is ethical principles applicable to all of us. The Act applies to all of us. The Code of Ethics applies, and the pronouncements apply. Therefore, the UDIN, for example, is mandatory because it is issued as a pronouncement by the council and notified. So those are mandatory. Below that is the first set of standards, the SQC, Standard on Quality Control. Very rarely used by us, but I believe one of the most important set. And as of today, only one standard exists there, which is SQC1. That is the Standard on Quality Control. It applies to all your work, not just assurance, not just audit or review or compilation, but even taxation services that we are providing in our office. The SQC mandates that all firms have to follow with this standard. Somewhere we are not following because maybe your entity may not be subject to peer review. The peer review starts with the focus on SQC. But because some of our entities or firms don't get peer reviewed, we do not value the importance of SQC. Nevertheless, it is mandatory. You have to follow SQC1. If you do not, action can be initiated against you for non-compliance of SQC. So at the top is the Standard on Quality Control. What it is, we will discuss a little later. So that is the first set of standards out of the 5. Then if you come down, you will see there are 2, the assurance services and the related services. Assurance means party other than to whom the responsibility of preparing financial statements is. If you are reporting or he's going to rely on it, it is assurance. If it is not, then it is related service. So what is related service? For example, management says you do this stock verification and report back to us only. That is called a related service. There is a standard called agreed upon procedures, which is under SRS. So the bottom right box is the standard for SRS, Standard on Related Services. Whatever is not assurance, whatever is not to be relied, you're only reporting to the trustees, you're only reporting to the management, no third party will rely on it, then you must rely and use the report, the standards under SRS. There are illustrations of how these reports must be. We must use them. If it is to be used by a third party, then it is assurance. Then again, it can be in 2 parts. It can relate to historical financial information. Today, when we are in September, you are giving an assurance for numbers as of 30th March 2020, 31st of March 2020, or 30th June 2020. All of that is assurance, but is relating to historical financial information. If you want to give certain assurance regarding future, that is to say regarding certain prospective financial information, that gets covered under the standards on assurance engagement. So prospective is assurance engagement, SAE. And when we are dealing with historical information, 31st March 2020, if it is an audit, it is standard on auditing. If it is a review, standard on review engagement. So therefore, the 5 important set of standards in the engagement standards are the SQC, that is the quality control standard. Then standards on auditing, which is for audit. It is a company audit. It is a 44AD audit, 44AB audit, or a 10B audit. For all of those will apply standards on auditing. If it is a review, that is again historical, but review, not audit, then SRE. If it is relating to future, that is, it is not relating to historical information, but it is still assurance, SAE. And if it is not at all assurance, it is only for management, SRS. These are the 5 standards which comprise the engagement standard. Very important for all of us to follow. And I hope today I've been able to share this with you. We will discuss them in a little detail as we go forward. These standards are to be applied when we talk about this set of standards on auditing. So if I have to diagrammatically bring these 5 standards, you can see all of them at the right. SQC applies to the entire firm. It is audit service, non-audit, assurance, non-assurance, whatever services the firm is giving, tax service, other service, it will be only and only through the SQC1 has to be applied. It is a firm-wide standard. If you are dealing with historical information and giving an audit report, SA, historical information, review report, SRE. You all know there are certain companies which require quarterly reporting, interim 6 monthly reporting. Our Institute of Chartered Accountants of India, for example, we prepare 6 months account. It is not a company. but there is still a 6 months audit that is mandated by the. So if there is an intervening period, then there are certain standards. If it is not an audit, then we do a review. Listed companies do quarterly reviews. Those are covered by SRE. So historical, audit, then SA, review, then SRE. If it is not historical, but yet an assurance function, SAE, and not an insurance function at all, not reported to third party, SRS is the standard set which will apply. I've diagrammatically tried to explain what we discussed. If you look at the triangle on the right, audit is the highest form of assurance. You never give absolute assurance. It is always reasonable and high level of assurance that an audit gives. You can never as an auditor say everything is true, correct, and 100% all right. That can never be in the case of an opinion. Though the expectation of the users may be such, the definition is very clear. It is reasonable assurance. For an audit, you will do vouching, there will be detailed tests involved, and you are giving an expression of opinion that the financial statements are true and fair. That is an audit. Whereas when I do a review, the review provides only limited assurance. It is never in the form of, in my opinion, it is not a positive assurance. It is a negative assurance that nothing has come to our attention. So no fraud came to notice, nothing exceptional came to your notice. That reporting is referred to as review. Compilation is simply preparation of financial statement. This year, some of our chartered accountant colleagues are asking that the entity is not subject to audit because the threshold of turnover is not met. But they are saying that the client wants to still obtain a set of financials from me. Then let us understand, you are then not doing an audit because it is not prescribed under the Act, not required under the Income Tax Act. But if the management requires you to prepare a financial statement, then it is a compilation. You can use the standard on compilation. Your report will be as given for the compilation statements, and you can prepare the balance sheet and then give him the financial statements. But please be clear, this cannot then tantamount to an audit, and therefore we say that the extended due date will apply. This year, of course, due date for all have been extended, but assuming a normal year, if the due date was September for audit and July for non-audit, you will still, if you are not subject to audit under the Income Tax Act, will have to file by July. But for those cases, you can still do a compilation if the client requires you to give certain set of financial statements. That can be done through a compilation standard. Audit, highest form of assurance. Review, nothing has come to our attention, reasonable. Compilation, there is no assurance. You are only preparing financials in the required format for the management purpose. And like I said, you can therefore not use the extended deadline. But since you are no longer a test client of yours, you are not doing any audit services to him, you can file the tax return, do all the tax work, and do the compilation service. You cannot give any assurance service to that client, but for all other areas, you can definitely provide non-assurance service to such clients. Very important, dear colleagues, it is going to be, because starting from 1st of October, the Income Tax Department's website is going to mandate your usage of UDIN. Right now it is optional. It is going to become mandatory. And once you are entering your UDIN, immediately that will get cross-verified with the institute records. And all of you who are taking out the UDIN yourself and not using the help of your articles will know that in the UDIN, there is a drop down. You have to select which year it relates to, the previous year, the assessment year. But more importantly, you have to select under which section of the Income Tax Act the audit is being done. So be very careful. If only it is subject to audit, should you select that 44 AB, A, B, C, D, the sub-clause will apply based on the turnover and its criteria. You cannot select the wrong clause and say a non-auditable will become auditable. It will not be justifiable for you. The turnover number is now directly fed in the return and will be in your audit report. And if there is a clear-cut indication that it doesn't qualify for audit, then definitely the department will not accept the extended deadline and consequences to us will follow. Therefore, very important to even understand it from a technology perspective. So like we discussed, auditing is high assurance, review is moderate assurance, whereas compilations or which are like I mentioned, only for the purpose of management. You are doing the entire financial statements and preparing. You are not giving assurance. Agreed upon procedures also, there is no assurance. With this, I move on to one very important standard, which we discussed in our 5 sets of standards, SQC1, which talks about quality control for firms. And here, dear colleagues, firms do not mean just partnership firms. Firm means even a proprietor. So it is applicable to all of us, partnerships as well as sole proprietors that perform audits. So audit that perform reviews, historical financial information, you are aware, other assurance, that means for future, and related service, which means non-assurance. So it is all other 4 kinds of services are covered under the SQC. Audit, review, future, non-assurance. For all these engagements, the SQC1 becomes applicable. And very important standard, because the elements of SQC1 talk about the quality control in an organization. What is the responsibility of the leadership as a partner, managing partner, or as a sole proprietor? It is your responsibility to ensure quality within the firm. You are aware, for example, on 1st of April, the institute allowed using digital signature for the purpose of certificates and report. So tomorrow a member may say that, yeah, in my office, if you come, that letterhead is lying in the printer, the stamp is next to it. There was no need for my signature. So the article or some other staff, he printed a certificate, used DSC, attached on it. Then for UDIN, the email comes to him and the SMS comes to my mobile. So he must have generated the UDIN, appended it and used it. Sorry, sir, your defense will fall flat. The SQC1 requires that the leadership has to be responsible for quality within the firm. And this is definitely not quality. You cannot state this as a reason for misuse. If it is your OTP, if it is your email, it is your mobile, your responsibility that you are authenticating it. The digital signatures, physical custody must also be your responsibility. So therefore, this SQC casts a lot of importance and weighs a lot of, puts a lot of weight on us as chartered accountants. We must ensure that we are responsible for the quality that we perform. In fact, even if you are filing the return of income on behalf of the assessee and using their DSCs, it is always important that you take sufficient precautions under the IT Act and other respective acts to make sure that tomorrow you are not in the soup. But for your own acts of your own firm, the leadership responsibility of the quality is with the partner in charge or with the proprietor in this case. The ethical requirements, well, they're very clearly laid out. The revised code of ethics was recently issued, and this SQC has, in alignment with the code of ethics, ensured that not only do you ensure quality, but you also ensure ethical conduct of your organization. There must be a robust acceptance and continuance of client relationship. You cannot say that, oh yeah, I filed the 10B and then I realized that it was Dawood Ibrahim's trust and therefore I did not know. Well, before accepting for the first time or before continuing every year, you must have a very clear acceptance and continuance of the relationship checklist that you maintain, and it is up to you whether you want to accept or decline such services. You cannot say that I did not know who the trustees or the beneficiaries were. That will not work. Your acceptance and continuance policies must ensure that you have sufficient KYC of the auditee that you are going to do. You must have sufficient human resources. If you are auditing a large trust, NPO, or an entity which has operations spread across the country, then you must also have the sufficient amount of human resources to justify it. You cannot simply state that because the fees was low, I do not have sufficient human resources. That cannot be. The SQC doesn't allow it. The engagement, performance, and monitoring must be done. So very important elements that are there as a part of SQC1. In fact, some members have asked me this question, that whether I can do work of a entity which is a charitable organization, a trust, or a NPO free of cost. And some people have, even in today's pandemic, asked me this question, that some firms are advertising that for all medical professionals my firm will provide free of cost return. Well, in my view, there are three important aspects that we need to look at for such advertisements or with such offers to file returns of income for free. It may be a charitable desire, but I see three important aspects to it. First and foremost is whether you are actually doing a charity or you are using that as an advertisement mode to state and put it across social media and other posters that my firm is doing this. If it tantamounts to advertisement, it will definitely make sure that these if it is advertisement and if it comes out as such, definitely you will be in violation of the schedule of the Chartered Accountants Act and subject to punishment, because if you are advertising it to non-members, to others, as a piece of advertisement. Second, providing services free of cost. What will happen is that if you are doing something for free, and this is my understanding of the Contract Act also, and I'm sure you will agree that if there is no consideration, then a contract cannot be enforced. Your engagement letter, your appointment itself can be challenged. If you look at the famous case of Khorbushan Jadhav, which was argued by none other than Harish Salve, who's also our member and advocate, he charged the fee of ₹1. He could have very well done it for free. It is not that ₹1 means a world to him, but he did it for ₹1 because that is consideration, and he has accepted the engagement and taken the contract. Therefore, the Contract Act comes in. And third, with regards to doing such work free of cost, yes, our code of ethics, our minimum prescribed fees also provide that your chartered accountant may do it at a lower rate, but then you must be able to justify and have sufficient reasons for doing such work at lower reasons. So all in all, this entire phenomenon of doing work or rather offering to do work free of cost, as in if it is in the guise of an advertisement, I would suggest against it. And therefore an important point that I believe has had to be discussed today, and therefore I brought it up. We will now move on to these ingredients of SQC1 very quickly. What is leadership responsibility for the quality within the firm? Well, the internal culture has to be there. It is the managing partner or his equivalent's responsibility to ensure quality. He must set an example by his own conduct. And how do you do it? You communicate the policies within the organization by using newsletters, workshops, and other forms. Very important for you to have a system of QC, that is quality control, and it is the ultimate responsibility of the managing partner or the proprietor to have designed and implemented and ensure its operating effectiveness of all of this. Anybody who is not in compliance with your quality control standards, there must be a disciplinary mechanism that follows. Commercial considerations, like I discussed, your fee consideration or scope cannot infringe upon the quality of work. Quality is paramount. It is expected out of a practicing chartered accountant, and merely because you took up the work at a lesser fee cannot be a ground for you to provide less quality or fees without quality or services without quality to your clients. The third policy that deals with leadership, quality responsibilities, deals with the performance evaluation and compensation, which must be there in the organization. And you must have sufficient resources. Make sure that your staff is complying with CPA requirements and other requirements of ICI to ensure that, yes, we are in compliance with these standards. The second element of SQC1 is ethical requirement. I believe all of you would have at some time gone through the revised code of ethics, so I will not discuss this in too much detail. But yes, the core crux of ethical requirements is objectivity. I must be able to be objective looking at the trust that I'm auditing. Therefore, if you look at opinion of the Ethical Standards Board, maybe 3 years ago, specifically where the question was asked in case of a private trust, if I am a chartered accountant in practice, but I'm also the beneficiary or a trustee in that, or I'm in the managing committee of the trust, then can I do the audit? Well, this is the clause that will be applicable to you. Objectivity in the ethical requirement. You cannot be objective if you have your own interest. Therefore, for example, in the Companies Act, a shareholder is barred from becoming the auditor, because tomorrow when the company goes to liquidation, you will still have some amount of share from the residuary resources after paying off all debts and clearing all other dues that the company has. You will still have be entitled as an equity owner to certain share. So in that case, we are not allowed as chartered accountants to do the audit of companies. Similarly, for trusts, if you are in the position as a trustee or a beneficiary of the trust, then objectivity standard will apply and you will not be allowed to do the audit. Integrity, I don't think I need to teach that to our august audience of chartered accountants. We have integrity embedded in us. We follow it in all our actions, and it is expected for all our ethical requirements under the SQC1. We must maintain confidentiality. If you are the auditors of a private trust, you know what somebody has bequeathed, for example, and what is the beneficiary position. You are aware of all these. Still, if you have been given the responsibility, then confidentiality in case of trust and even other entities will have to be maintained. It is our responsibility as CA in practice to ensure highest level of confidentiality. Professional competence, stay updated. Whatever are the changes in the Income Tax Act, for example, the changes that have come in the FCRA Act, all of those will have to be updated. It is the duty of members to stay updated, relevant changes have to be known. Do your due diligence, get yourself updated, attend seminars and programs, and make sure that you have the required quality sets to fulfill the ethical requirements. And finally, professional behavior. Well, professional behavior is not just how you conduct. It is not just, I believe, the appearance of your office, but a far larger term, in my view, that includes professional behavior. And I always give this example when I talk about professional behavior. If you or your loved one has to go to a doctor, and that doctor, for example, comes to you in a t-shirt, in jeans, with tattoos and a headphone, and says with a moving swagger that, yes, I will do the operation, you and me will never trust our physical health to that doctor. If we do not trust our physical health to such doctors, how can somebody trust his financial health to a chartered accountant who also doesn't seem professional? Our professional behavior is through our conduct, our appearance, through everything that we do. A lawyer is recognized as a lawyer in his black robe. A doctor comes in his today in Corona times, in fact, in a PPE suit with mask and other gear. The professionals are having the regard in the society because of the professional behavior that is expected out of them. And it is not just your communication, like I said, your appearance in the office, the infrastructure, but also basic other things, how the people perceive professionalism. So elements of SQC1, we discuss about leadership. The ethical requirements also require that you must have an independence and ethics partner designated in the organization. Look at the independent standards that are there, a part of the code of ethics. And how do you ensure this? I will show you an example of how you can do an ethical check within your organization. You can communicate within the organization, whether any one of you has an interest in this trust, whether any one of you has an interest in this company. You have to identify and evaluate those threats, either remove those threats or withdraw from the engagement if the threat cannot be eliminated. A simple example of how you can do it is through obtaining a written confirmation within the firm that, yes, you have no interest in this entity. I have no shares, I have no ownership. The trustees, the directors are not relatives of mine. And I have here in this presentation given an illustrative annual firm personal independence confirmation. This can be circulated within your organization, and you can seek independence confirmation from all your employees, whether his family members are there as executors, administrators, or trustee. If you look at point 4 here, you can very clearly see it talks about, I believe you can see the mouse here. During the period I am and my immediate family members were not an executor, administrator, or trustee of a trust estate, and hence so these are all examples that I have laid here for the benefit of our members. You can take this kind of independence confirmation, not just for trust and NPOs, but for all the audits. The single entity, single form can be taken from all the employees articles with us serving in the organization. So leadership, ethical requirements, acceptance, and continuance. Like I said, it is our requirement now. In the case of trust, it has become onerous even on the trustees to ensure that, for example, for all donations that they are taking, They must have the relevant KYC available with them, their name, their address. Sometimes we are not capturing the address. It has become extremely critical to even have the address of the donee when we are taking it. If it is a corpus donation, then it must specifically mention that this is towards corpus. Similarly, for us as chartered accountants, we must know the owners or the key management personnel of the trust, their attitudes toward good governance. All of this will form a part of our acceptance and continuance of the engagement. There is a form which can be used for all your clients annually. Fill it up where you have said that if it is a new relationship, whether you have assessed management, what is the impact that it has over fraud, what is the organizational structure. All of this can be documented and made a part of your file to prove that you have complied with SQC1 and that the engagement can be accepted if it's the first year or can be continued for every subsequent year. Human resources, you must have a policy within your organization. A lot of software is even today available to manage your human resource within the organization. You must be able to assign personnels, give them work so that you have sufficient CPD also monitoring and happening. Your engagement performance must be monitored by the partner or the proprietor. The entire team's work has to be ensured that yes, there is planning that has happened for the engagement. You are qualified, people are engaged in the audit of the entity so that they have sufficient technical knowledge about it. If there is a difference of opinion, how do you deal with it? Your audit member has a certain opinion that no, the amount in this audit which is shown as applied in the 85%, it is not actually towards the object, it is not applied. We are all aware, for example, earlier the case was that a trust was giving money to another trust. Now, very clearly, if it is money transferred from a trust to the other trust, you cannot include that for 85%. Any of these differences that may prop up during engagement, you must have a mechanism within your organization to resolve these differences, as finally the responsibilities of the engagement partner who's going to sign the financial statements or who's going to sign the Form 10B. And this must be constantly monitored. And a very important part with regards to the SQC is with regards to the documentation. In case of large firms, like I have mentioned here, you may use electronic database. In this pandemic, a lot of the audit evidence will come to you in soft copy. You can maintain it subject to you having confidence with regards to the authentication of these documents which are given to you in soft copy. Smaller firms can still continue to have physical files. The factors which decide how you should document is the size of the firm, your degree of authority, and nature and complexity of this transaction. But a very important point that the SQC1 also talks about in para 83 is regarding retention. How long should you maintain the audit documents? You did the audit of a trust. For how many years are you required to maintain it? So then the para 83 says that in case of audit engagement, the retention should ordinarily be no shorter than 7 years. So if it was March 2013 and you had signed the 10B, let's say on 15th or 20th of September 2020, then yes, you can dispose of all those files relating to March 13, no longer required for you to be maintained. But for 7-year period, you will have to ensure, and that 7 years is calculated from the date of the auditor's report. So on 1st April, you cannot discard, but on the date of signing, 7 years have elapsed, then the documentation is no longer required. So with this, we conclude a very important standard, which I wanted to take. I probably took 10-15 minutes, but wanted to discuss because it not only will apply to your trust and NPO audits, but also to the other services that you're giving in your organization, review services, other assurance services, or even related services which are not assurance. All of them require you to follow SQC1. It is an overarching umbrella, the main standard, parent standard with relating to engagement standards. Then we come to the next set of standard, which is also, I'll take some time on it, and then other standards are not very relevant for trust and NPO, so we'll just browse through them. The second and the very important piece of standards are, which is also included in the topic, is the standards on auditing. Like I discussed, the guidance note for audit of trusts also imply this, that you, while auditing 10B, will have to follow the standards on auditing. What are the standards on auditing then? Let's try and understand them in a little detail. Today, as the session has been specifically designed to discuss this from a small and medium practitioner perspective. We will try and focus on that also. If you look at the standards in auditing, it's a beautiful set of standards which are given in series. So there is a series to it. There is the AASB, which is the Auditing Assurance Standard Boards in India, issues these standards. They are derived from the International Audit Board. And there was a clarity project where they said that we want to have our standards in a very clear manner. Tomorrow, for example, due to COVID, if they want to come out with a standard and it relates to general principles, then they will put it in the 200 series. Unlike our Income Tax Act, where we need a subsection and a 44 capital A, capital B, that is not required here. Simply because of the framing of the structure, you can insert a new standard at a relevant point of time. Therefore, the 200 to 299 series is the general principles which set out the responsibilities. The SA 200 is the first, which talks about the overall objective of the independent auditor. So your independence requirement, what is the objective of the audit, is dealt with in SA 200. SA 210, very, very important standard, which deals with the agreeing the terms of audit engagement. Here you will agree with me that we, in small and medium practices especially, never focus on obtaining an engagement letter, especially for audits which are of trust, NPOs and such charitable organizations. We are very light in terms of our compliance. Well, in fact, the SA 210 is there to protect us, because it is in this standard that is laid out how you can agree your responsibility, which is restricting your responsibility, and more importantly, extending and making sure that the management is clear about their responsibility. In a lot of audits in trust, I have seen that the trustees in the end stand up and say, no, my auditor was doing everything. He was supposed to maintain the books of accounts. He was supposed to write the financial statements, and he was supposed to file the tax return. And if anything has gone wrong, please arrest him or please take care of him. I am not responsible. If you have an engagement letter, the first thing in SA 210 it talks about is laying down the responsibility of the management. In an audit report under SA 700, we very clearly state that accounts is the responsibility of the management. Having an internal control framework is the responsibility of the management. Sadly, in the 10B, there is no such paragraph. You can put it in your comment section, but what is very important is in your engagement letter, have this very clearly carved out and written that accounts will be the responsibility of management. So tomorrow the trustees cannot come back, or the settler cannot come back and say why you did not do as a chartered accountant, as the auditor. Well, it was not my responsibility. My responsibility is only to express an opinion on true and fair and to give the particulars in the annexure to 10B. That is all that my responsibility is going to be. You can also have certain additional paragraphs in the engagement letter which state very clearly that for certain trusts, there are certain, the trust deed is private, it's a private trust. You may then be encountering a situation where you're divulging that information, maybe in case of peer review. So you must have a paragraph in your engagement letter to clearly state that confidential information will be shared with my peer reviewer if I'm selected for peer review, and that audit gets picked up for the purpose of review. The fees should also be mentioned. I generally also advise all my chartered accountant colleagues have a paragraph specifically to state or to restrict your liability, stating that my liability will be only to the extent of my fees in the case of any negligence, because then they cannot come and say that no, the auditor is supposed to pay the entire financial burden of anything that happens. Those are all terms which have to be agreed upon, and therefore the engagement letter is one very important piece of letter. SA 210 has the format. I would request all of you, whenever you are engaging in an audit of any trust, any NPO, any organization or institution of such a nature, also please ensure that you have total compliance with the SA 210. I will be discussing only those standards which are relevant to us at this juncture today. The SA 230 talks about documentation. Very important and critical. You must, in your audit file, either in soft copy or in physical, have sufficient documentation. And it is required that any third party who is not in the audit can also look at the documentation and understand what were the procedures performed for you to derive at an opinion. That is the basic crux and requirement of how you must document it. You may have a permanent file, your all permanent records, the trust deed, the number of bank accounts, the list of related parties, all of those will probably find a part in the permanent file. And then you can have a current file, which discusses the current year expenditure, how the 85-15 happened. If 85% of the amount was not expended, then whether as per the explanation 1 to 11, whether the form 9 has been filed, that I will be using this interest which is accrued but not received to me in the next year, it will be received and I will be spending it in the next year. Or whether as per 11.2, I'm going to, for example, defer it for a period of 5 years with for the purpose of the object that is clearly given in the resolution that the trustees provide. That will form a very critical part of the documentation that is required by you as an auditor when you are coming and commenting on 10B and attesting that. So all of that is to be documented in the current file. Like I mentioned, the permanent file generally has documents which remain constant year on year. Your list of signatories, your related parties, your deed, all of that will be in the permanent file. Your current file will look at the current year expenses, contributions, incomes, the application, and more importantly, if the 85%, 15% application has not been met, 15% is set apart and 85% is not expended, then your form 9 or the form 10 which has been filed will also have to be made a part of your working papers in the audit documentation. Your responsibility relating to fraud, we are all aware. I will not discuss. It is the age-old statement that we have all learned. Your role is that of a watchdog and not of a greyhound. Similar statements that if you find a fraud, you must report it. I know it is related to trust NPO today, but if it's a company or a Section 8 company, then if the fraud exceeds 1 crore, in those cases, you will have to compulsorily also report those frauds to the MCA. SA 250, very, very important. Sometimes not understood by us. It is going to come in the form of NOCLAR. Was deferred. NOCLAR was deferred in the Code of Ethics this time, but very soon will be made applicable for listed companies to start with. But irrespective of NOCLAR, the SA 250 itself casts the responsibility on the auditor of consideration of laws and regulations in the audit. So not just the Income Tax Act, the FCRA, the Societies Act, the local laws, if they apply to them, all of those, whether they have been complied with or not, the SA 250 mandates that the auditor must, if there is a material impact of those laws on the financial statements, then you will have to have a consideration of those laws and regulations. This 260 gives out the manner of communication with those charged with governance, trustees in the case of trust, or the board in case of it's a company. The SA 260 lays out how that communication must be there. If there are deficiencies in internal control, you then lay it out in SA 265. And for large trusts, institutions, or other NPOs, where there may be a joint audit, similar to how central statutory audit functions, then the responsibility of joint auditors has to be assigned as per the SA 299. So the 200 to 299 series talks about the general principles. We move on to the 300 to 499 series, a huge series which deals with the risk assessment. And this is where I come back to where I started the session. In today's time, when you will have the same amount of clients, same amount of opinions that you will have to give, but the time is limited. How can you use these standards to your advantage? The SA 300 series talks about planning and engagement. And when we plan an engagement and we assess the risk, and I'm discussing all these standards together, is you have to work out the materiality. Once you have arrived at the materiality at planning level and at performance materiality level, that has to be applied. So if there is smaller accounts, insignificant value, you can easily exclude them from your audit. But you must now adopt the concept of risk-based audit. You cannot start from routine cash, bank, ledger scrutiny and go up. You will have to plan your audit from top to bottom. Look at which accounts have higher risk. Go through them in a higher detail. But for example, if there is a trust has an office and that office has been paying electricity bill for time immemorial of 20,000 rupees per month, and when you get the trial balance after the accountant has finished the accounts and you see electricity expense at 2,50,000, you in fact, even if you don't look at that expense ledger, don't look at 12 invoices and all of that, it's okay, because there is no risk. You can see that it is the same amount of electricity that is being continued. You can see 12 postings and not even vouch any of those expenses. But if there is a huge variation, if you see certain risky accounts, those are the ones. For example, in revenue, there is a huge donation which is received. There is fictitious, there is anonymous donation, for example, that is received. Then in the case of anonymous donation, as you are aware, 115 BBC mandates that they will have to be taxed at 30%. Whether it is anonymous, that will have to be looked at in detail, and that identification that yes, my receipts are a risk account, high risk account, designate them as such. Have the entire ledger accounts and designate which are the riskier and the important accounts that you must have, and then have a top-down approach to do the audit. That is what is going to be critical in planning and risk assessment and response to risk of audit. The 500 to 599 strictly and only talks about audit evidence. So this is when you are doing the audit. What must be the audit evidence? The audit evidence must be such which proves to a third party that how you were able to arrive at the opinion. So the how of what you did is in the audit evidence standard. How you did it. If you have any evidences, you looked at vouchers, please retain certain copies of that in your file. SA 505 talks of external confirmation. Very important. In audit, the most highest form of comfort can be obtained through a third party. So if there is a high bank balance in the trust accounts, please seek an external confirmation. You can write a letter to the bank, get it signed by the trustees saying, please directly share our bank statement as of 31st March to our auditors. Give your address and mail it across. What in fact we do is I additionally add an envelope which is addressed to myself with my address and a stamp on it. So simply the bank has to put the bank statement of 31st March in that envelope and send it in post, and it will directly come to me, because external confirmation is the highest form of audit evidence and it must be sought. It is again based on your judgment. If you feel that yes, some large donations in the trust must also be taken external confirmation and you have sufficient time, please write to those donors and take an external confirmation to ensure that you have this. This is in your interest as auditors. We have taken external confirmation and not just relied simply on what the management has produced before me. I have taken an external confirmation from the party concerned, the bank, the donor, or any other important account that you feel needs confirmation. The analytical procedures, compare current year with previous year so that you know if there is any surprise that is to be account that is to be picked up. The sampling, and then note the differences, reasons for that. Sampling of how you may do a statistical or non-statistical sample. Lot of software is available which will help you to randomly generate numbers and pick those sampling. Related parties, very important both in the Income Tax Act also because of the reporting purpose and also subsequently even for the audit purpose. Identify related parties. If the trust has expended money only for the benefit of trustees, you can very clearly note which are the related parties, and then you will be able to say with clarity in your report whether these transactions are paid to related parties, whether they are at arm's length or not. Your subsequent events, that is events that happen after 31st of March, till the date of your signing report. If there is a huge amount that is being expended, you know if there is some liability which is coming, that all can be understood following SA 560, going through the accounts not just up to 31st of March, call for the bank statement after 1st April till the date of your signing, look for any major expenses so that if there is a condition existing on 31st of March which needs a provision and you're not aware of it, you can take care of it through subsequent events. And always take the written representation signed by those charged with governance, the trustees in the case of a trust, the directors in the case of a company. That written representation, because a lot of times you will not be able to audit everything and you will rely on the management for certain aspects. Or wherever you have placed a reliance, a written representation is always useful. The SA 600 series talks about using the work of another auditor. In case the trust or the NPO has branch auditors, you will rely on the work of those branch auditors using SA 600. If there's an internal audit report and certain verification is done on a timely manner, certain compliances are verified by them, you can rely on the work of an internal auditor using 610. And for certain cases, if you require to involve an expert, you use SA 620. So this series talks about the 600. 800 will not be applicable in our case, so I'm skipping that. But the final but most important set of auditing standards that we will discuss today are the SA 700 series, which deals with audit conclusion. And here I would like to mention that it is in fact very important we understand the concept and all of these standards in great detail with utmost clarity. Because like I mentioned, it is through this you communicate your findings and arrive at your opinion. This is where the quality of the audit of a chartered accountant gets shown in the outdoor. And the biggest bane, in my view, which is in our profession, is this over reliance that we do on formats. My request to all of you with folded hands is every year, at least once before you do the first audit, try and go to the institute website and see what is the format of the audit report. I'm saying this as chairman of FRRB so many times. Even this year, I see audit reports which do not start with the opinion paragraph. This was changed 2 years ago. Still, people are continuing with the old format of audit report. Key audit matters was introduced. You can see SA 701, but it is only for listed companies. But somebody would have told his article that please take L&T or Reliance or Tata's balance sheet. And even for non-companies, non-listed entities, people are mentioning CAMs. It is extremely embarrassing for us as a profession. I believe we will have to get over this, if I can use the word and apologize if it offends anybody, this laziness of relying on formats. I think if the world only follows formats, then probably today in this corona pandemic, we will never find a cure of COVID, because we will all rely on existing formats and existing medication that is there. The beautiful architecture that you see in Bangalore, Ahmedabad, Mumbai, Delhi, if all architects were to follow a fixed format, then all buildings will look the same. I think we also have to realize that we cannot simply rely on formats. These standards are very important and critical for us to follow. The 700 standard has illustrations at the back of what the audit report must be. Certain paragraphs of that can also be taken, extracted, and form a part of your 10B. I'm also doing it for my regular tax audit. For example, responsibility of accounts to the management. Those paragraphs can be taken out and included in your comment section of the 10B. Very important how your opinion can be formed. The SA 700 provides for it. There are different illustrations for consolidated entities, for standalone entities. All of them have been given. 701 is CAM, like we discussed, only for listed entities. 705 talk about the modifications, whether it is a qualified opinion or whether it is an adverse opinion or whether it is a disclaimer of opinion. What is the difference between all three? We discussed this briefly, so I'm not repeating. That is given in 705. And EOM, which is emphasis of matter, drawing attention to a particular point, that is discussed under 706. So very important piece of standards that we must all know and understand, specifically also when we are dealing with our trust, NPO and institution audits, because they are also applicable. We have now today discussed the SQC, which is for all our services, the SA, which is for audits of historical. But if it is not an audit, then what do we do? Like I said, it is review. If it is for a limited purpose interim period, SA 2410. If it is for the full year, SA 2400. The two standards that are out there. The 2410 you would have seen in the case of listed company quarterly reviews. Again, here the limited assurance or moderate assurance is provided, whereas in audit, high level of assurance is provided. I have certain slides relating to RE 2410, which I will share with you for you to easily understand what is a review. But I wanted to take you through this concept of review so that we understand what is the difference between audit and review. We have today understood assurance and non-assurance, that is related services. Third party is not relying, then it is related service. Third party is relying, then it is assurance service. In assurance, if it is historical, it can be audit or it can be review. If it is not historical, if it relates to future, then you will use SAE, Standard on Assurance Engagement. This is the fourth set rather that we are discussing. SQC, SA, that is audit, SRE, that is review, And the fourth set is the SAE, assurance engagement. So you are giving assurance, but it is not historical. It is for future perspective. Bank loan purpose, if you have to give, for example, 5 years, a chartered accountant cannot certify the future projections to be true. That is violation of the second schedule clause. But what you can do is give an examination of prospective financial information, that you can verify assumptions, you can verify the mathematical accuracy, and the report must strictly be as per SAE 3400. So if your clients require it for some future financial information projections, you can use 3400. The other two are for prospectus and controls. So if it is assurance but not historical, that is its future, then we use SAE. And the final set of standard is the SRS. Like I discussed, the SRS deals with agreed upon procedures. When you are reporting only to the management, you are doing inventory verification, reported only to management, third party is not relying, therefore not an assurance function. You use 4400, format of the report is given there. And if you want to prepare a financial statement, you are not the auditor, you are filing the tax return. Maybe entity is not subject to audit, but they want a financial set of information, SRS 4410. You can issue a compilation engagement report and you can prepare the financial statements as required by them. Another common question that people ask me is whether you need a UDIN on prospective financial information. I believe now we know the answer, the SAE 3400. If you are using that report for prospective financial information, you will require a UDIN. For prospective financial information or for provisional, like I said, if it is not auditable, then you can use the SRS 4410 for compilation of the financial statements, preparing those financials for the purpose of management. And on the question of certified true copy, whether as a chartered accountant, I can issue a certified true copy. Well, we are not gazetted officers, and therefore the job of issuing a certified true copy and stamping it is only with the notary or such gazetted officers. What you can do as chartered accountants, for example, if the trust or NPO requires you to submit the tax return or the computation for the purpose of filing somewhere, you can issue a report on that, stating that you have looked at the acknowledgement and that the amount stated there agrees with that with the income tax portal. The primary purpose the banks asked for a chartered accountant is because they do not trust a simple scanned copy. Today, with the advent of PDF, numbers can easily be changed. And the banks are not comfortable with relying on such scanned document PDFs. So in that cases, instead of simply stamping a certified true copy, as chartered accountants, what you must do is give a report on that, state what you have done, the procedures, use the guidance note that we discussed at the beginning, and issue a certificate along with a UDIN. So with this, I conclude my presentation on the engagement standards which are relating to audit of trust and NPOs. I hope I have been able to take you through the entire gambit of engagement standards. We discussed the guidance note on certificates at the beginning, which is very useful for us in day-to-day practice. We discussed this guidance note for trusts, which is there by the ICI. The 5 set of standards, SQC at the top for all our services. If it is assurance and historical, we can give an audit, SA. We can do a review, SRE. If it relates to the future, that is non-historical, SAE, standard on assurance engagement. And if it is not at all assurance, only to be submitted to management, then SRS, related services. These are the 5 standards. I hope I've been able to do justice to the topic that was assigned to me today. I would once again like to thank the entire Karnataka Association for inviting me and all of you for a very patient hearing. Thank you very much.
Thank you, sir. Sir, now we can go for the question and answer. There is one question from Rahul. He asked, I think ICI only recommends use of ICI auditing standards and accounting standards in trust NGO audit. But is there any law that mandates the use of these standards in trust NGO audit, like Companies Act 2013 mandates in case of companies audit?
So in the Companies Act, let's understand this very in a very clear manner. Let me just first turn off this screen. Just give me 1 minute. Yeah. So the question was that what mandates the use of auditing standards in trust? So let's be clear and categorical regarding two aspects. The Companies Act made the accounting standards mandatory on the management, that is the preparers of financial statements, because the standards the institute came out way back in the 70s, and then there is a gradual progression that has happened year on year with regards to the accounting standards. But it was when the NACAS was introduced and the accounting standards were made mandatory for the companies, so they had to follow. Auditors were always subject to follow these accounting standards. If they noticed non-compliance for companies, they had to qualify them. But to put weightage on compliance of these standards with the company, the accounting standards were notified in the Companies Act. Subsequently, in the Act revision of the Companies Act 2013, they have also included the audit standards. And that audit standards is not to make it mandatory for us, because it was always mandatory for us as chartered accountants. They have mentioned auditing standards because they want those auditing standards to also be approved by NFRA, which has happened. What NFRA has done is that all standards as issued by ICI are to be assumed to be as issued by NFRA. And MCA has also notified that. So our auditing standards are notified under the Companies Act. The reason they wanted to do it is because for non-compliance of this public interest large entities, if they notice non-compliances of auditing standards, NFRA can still initiate action. So it is to enable their disciplinary mechanism that they have mentioned auditing standards in the Companies Act. If it is not a company, if it is a firm, proprietor, or any other entity, trust, or an NPO, you are still subject to standard auditing. It is mandatory. And if you do not follow those standards auditing, you will be subject to the disciplinary mechanism of ICI.
Sir, is there any basic template to comply with SQC1 for small and medium practitioners? Yeah,
I have tried to give certain parts of what is to be complied by small and medium practitioners in SQC in the presentation. Sriramji, I'll be sharing the PPT with you.
Okay.
In fact, even certain formats for the engagement letter that you must take from your trusts or the institutions that you are auditing, those are also available. There are certain draft management representation letters that you must take, because, for example, the 10B, the particulars you are giving in the annexure, there is certain information that you are compiling that you have sometimes maybe obtained directly from the management or you have relied on them. For that, you must take a management representation letter, and I can also share a format of that with you.
Thank you, sir. So there is no other question, sir. So I thank you, sir, because you had given your valuable time for us, and you had thrown very much light upon how the SS has to be complied for auditing the trust. So over to Gaurish for vote of thanks.
Sir, it was a wonderfully presented session, and appreciations are coming, sir. On behalf of KSAA, I thank you for being with us and presenting your thoughts on audit and auditing standards with respect to NPOs. Thank you, sir. Thank you very much.
Thank you. Thank you very much, Gauriji. Thank you to once again Sriramji, the Karnataka State Chartered Accountant Association, and all the participants for such a wonderful participation. I think on this topic, especially when there is no CP, to still see so many members who joined from the beginning, and it's almost 5:55, so we've come to the end of our time, and they are still attending this session. I think it's a great point. My compliments to the entire managing committee, the office bearers, and all the members of the Karnataka state for their interest. I hope I was able to do justice to this topic, and look forward to probably physically interacting and meeting with you in the near future. I thank all of you once again and wish all of you all the best. Thank you.
Thank you, sir. We need your support too, sir, in upcoming future, sir.
Always. It'll be my pleasure. Thank you very much.
Thank you, sir. Thank you very much, sir.
Thank you.
I also thank CA Vishnu Bharat sir and CA Satchidananda sir for supporting KSA continuously for all the time. Thank you both of them. And also I would like to thank our president Kumar Jigjini sir on behalf of KSA. I would like to thank him also, and the entire EC's team who support each and every sessions and activities of KSCA. I thank entire EC also. I also thank CA Sriram sir, who coordinated with speaker and who has taken the entire burden of this session.
Thank you.
Thank you, sir. Also, I would like to thank technical team of KSCA for arranging one of the best webinars. Thank you, technical team. Thank you. And finally, all the participants, I would like to thank you for being with us and supporting KSA all the time. In every webinars and seminar sessions, conferences, every time. Thank you, one and all. Thank you all.
Thank you, sir. Thank you. So we are